video is focused on accounting for not-for-profit organization. First of all, we need to know that there are two types of business organizations in general. Organizations which work for profit and organizations which do not work for profit. Now, what does this mean? There are certain businesses which are established with the main motive of making profit, but there are some businesses who do not aim to make profit. Their objective is not to make profit. They are not formed and established for the sole reason. Their aim could be provision of healthcare, education, social welfare, so on and so forth. So in this video, I'm going to focus on accounting for not-for-profit organizations, organizations which do not aim to make profit. But that does not mean that they don't make profit at all. Not-for-profit organizations do make profit, but their aim is not to make profit. Let's assume there is a not-for-profit organization whose objective is to provide healthcare services. So in pursuit of this objective, if they do make profit, that's okay. So what's the basic difference between a not-for-profit organization and for-profit organization? For-profit organizations, when they make profit, the profit goes to the owners of the business. So if a business is a public limited company and it is for profit, once profits are made, profits are distributed among the shareholders in the form of dividends. But if it's a sole trading business, then the profit belongs to the owner. If it's a partnership, profit belongs to the partners in the agreed upon ratios. But when we talk about a not-for-profit organization, if they ever make a profit, the profit is invested into the cause. Let's assume we are talking about a hospital, a not-for-profit organization, which has the main objective of provision of healthcare services at low cost. Even if they make profit, the profit does not go to the owner. In fact, the profit is invested into the cause, probably buying some machines, some equipments, MRI machines, CT scan machines, probably increasing number of beds in the hospitals, or you're making a new laboratory, something like that. So one thing you need to understand, not-for-profit organizations, because their aim is not to make profit, they do not make profit and loss account or statement of comprehensive income. Instead, they prepare income and expenditure account. Likewise, they do not prepare a statement of financial position like profit-making organization. Instead, they prepare a statement of affairs. Hi, I am the commerce specialist. Welcome to my channel where you find videos covering learning outcomes of various academic qualifications and professional certifications, including life-changing business ideas and hacks. So let's discuss a comprehensive question on not-for-profit organization. For this example, I have chosen a club. It's a horse riding club. So we have a question here. It says receipts and payment account for Delta Horse Riding Club is given below. You've got opening bank balance. You received some money from selling race tickets. Members have paid their fees. You have received some donations. So on the payment side, you have paid for admin expenses, insurance, horse trainer expenses. You have given donations to other organizations. You have paid for purchase of race prizes and some stationery items. Below here you have opening and closing balances for building, membership fee receivable, membership fees prepaid, payable to suppliers for race prizes and stock of race prizes. Given all these details, we are asked to calculate accumulated fund, and we are supposed to prepare membership fee account and race prize account, as well as income and expenditure account and the statement of affairs. So the very first requirement from examination point of view is we need to understand what is meant by accumulated fund. Accumulated fund is just like opening capital. So here I need to make you understand and recall that we have this famous accounting equation, asset equals liabilities plus capital. So from assets, if you minus liabilities, you are left with capital. For example, assets minus liability will be equal to capital. So just now I told you accumulated fund means capital, and to be more precise, accumulated fund means opening capital. So if we are able to add all the assets at the beginning of the year and minus all the liabilities at the beginning of the year, we'll get capital at the beginning of the year, which is accumulated fund. So what I'm going to do here is I'm going to calculate accumulated fund. I'm taking total assets at start at the beginning of the year, and I'm going to subtract total liabilities at the beginning of the year, means at start, means the opening balances. So if you notice, we've got opening bank balance here in the receipts and payment account. Okay, this is an opening assets. And here we have January 1st, these are all opening assets. So I'm just highlighting assets. Building is an asset. Membership fee receivable is an asset. Stock of raised prices is also an asset. So if I add all this, 1680 opening bank balance plus opening balance of building, which is 7,800, plus membership fee receivable 520, plus stock of raised prices, which is 304. So these are all my opening assets. From this, I will subtract opening liabilities. So opening liability is not here. Here, if you look at membership fee prepaid is a liability. Because if members have paid us in advance, we owe them the services. That's why opening membership fee prepaid is a liability. Payable to suppliers for raised prices is also an opening liability. So we have two opening liabilities, which is 80 plus 464. So if I add all this and minus this, I will get my accumulated fund, which will come to 9,760. Our next task is to prepare membership fee account. Now guys, please remember, this is a very important account. In a typical club, what happens, club has members. Because this is a horse riding club would be having some members. So what is happening, some members are paying membership fee in the current month. Let's say if it's a month of June, some members are paying the fees of June. Some members who owe you for April and May, they're paying the fees in June. Some members are paying in the month of June for July and August. So what is happening is, you're receiving current membership fees for the current month. You are receiving membership fees in arrears for previous months. You are also receiving membership fees in advance for advanced months. So what we need to understand is, applying the matching concept, we need to calculate how much membership fee is applicable to this particular year. So probably in this year you are receiving membership fees which were outstanding for the last year. In this year you are receiving membership fees for the current year and also membership fees for the next year. Here the year is 2022. So I'm preparing a membership fee account. Example of non-profit organizations are hospitals, schools, welfare organizations, trust, clubs. So here we've got a club. So obviously clubs have members. When you're preparing membership fee account, please record first your membership fee receivable, which is an asset. All assets have opening balance on the debit side. So we have opening balances here, we have closing balances here. January 1st, 2022, December 31st, 2022. So opening balance of membership fee receivable is 520. All assets have opening balance on the debit side. So I'm writing here January 1st, 22, membership fee receivable, brought down balance, which is 520. If opening balance is on the debit side, closing balance of asset would be on the credit side. So I'm writing here December 31st, 22, membership fee receivable, carried down means closing balance, which is 680. So when you're preparing membership fee, or it is also known as subscription account, subscription means fees, first check in the question if there is opening and closing balances. Membership fee receivable or subscription receivable is an asset. Opening balance will be on the debit side. Closing balance will always be on the credit side for assets. Now you also have to check in the question, are there any membership fees received in advance, which is prepaid? So we have membership fee prepaid, opening balance and closing balance. Please remember, if membership fees are received in advance, it's a liability. So opening balance of a liability will be on the credit side. So I'm writing here again January 1st, 2022, balance brought down of membership fee prepaid, which is $80. And closing balance will be on the debit side. So I'm putting this here, December 31st, membership fee prepaid, carried down 296. Now I want you to focus on the receipts and payment account. You have received membership fee total in the current year is 15,896. Once you have received, you have debited bank and you should credit membership fee account, which I am writing here. I can just write bank here, which you have received, bank debit, membership fee credit, which is 15,896. Now we're going to add all this and subtract these two to get membership fee income for the current year. So if I add all these three, I get 16,656. From this total, I'm going to minus these two in order to get membership fee income for the current year. And if I do that, I get 15,840, and this is my membership fee income. We need to understand, according to matching principle, if you need to calculate profit or loss, we need to consider income, costs and expenses of that particular period. So what is happening, though you have received a total of 15,896, but this includes some prepayments, some arrears. So we need to know, although we have received this much amount, but how much relates to this period. All the membership we received may not be income for the current year. It could be for previous year or future years. So we need to adjust that. This is what we have done in the membership fee account. I repeat, what I have done is, first I have taken membership fee receivable, which is an asset, on the opening side, debit side. Closing balance is always on the credit side for receivable, which is an asset. Membership fees received in advance is a liability. Opening balance is always on the credit side. Closing balance is on the debit side. The next thing you need to look at is, in the receipts and payment account, look at the receipt side. If there is any membership fee received, record it on the credit side. Why? The double entry is, when you receive money, you debit bank and you credit membership fee. So we credited it here. Then I added all this, subtracted the opening and closing balances here. What I get is membership fee applicable, relevant to the current accounting year. The next thing we need to calculate is raise price account. Raise price account. So what I'm going to do is, I'm going to make a T account here and I call it raise price account. So when you're preparing raise price account, check the question for all the details relating to raise price account. So if I look at here, especially in the opening and closing balances, we have payable to suppliers for raise price, opening balance, it's a liability, and a closing balance. Please remember, liabilities, opening balance will always be on the credit side. So I'm writing here January 1st, 2022, balance brought down for payable to raise prices. So I'm just writing short form, don't have enough space. So I'm writing payable to supplier for raise prices. So I'm just writing payable to supplier for raise prices, which is opening balance 464. Likewise, I have closing balance. I'm going to write here December 31st, 2022, payable to supplier for raise prices, carried down, closing balance 544. Opening balance of liability will always be on the credit side, closing is on the debit side. Likewise, we have stock of raise prices, which is an asset. Opening balance asset will be on the debit side always. So I'm writing here January 1st, balance brought down of stock of raise prices, which is 304. And obviously opening balance of an asset, if it's on the debit side, closing balance of the asset will be on the credit side. So December 31st, 22, carried down balance for stock of raise prices is 368. Now, if you look at the payment side, you have paid for raise prices. You have purchased some stock here. So when you purchase, bank is credited and raise prices are debit. So I'm writing here bank. How much? 2160. Now I'm going to add all this thing here and minus these two. So I will get raise prices used during the year, or the cost of raise prices. So if I add 304, 2160 and 544, I get 3008. And from this, when I minus these two, I get 2176. This is the cost of raise prices used during the year. So I'll give you a quick recap what I've done in the raise prices. First of all, we had payable to suppliers. Payable to supplier is a liability. Opening balance of a liability I've taken on the credit side. Closing balance of the liability I've taken on the debit side. Likewise, relating to raise prices, we also had stock. Stock is an asset. Opening balance on the debit side. Closing balance on the credit side. Then we've got purchase of raise price. So when we purchase, we debit raise price and we credit bank. This is the bank account, payment side of bank account. So if bank is credited, raise price should be debited here. So I've taken it here on 2160. Then I add all these three minus the two in black. I get cost of raise prices used during the year. Next very important step is, as I told you, not-for-profit organization do not prepare profit and loss or statement of comprehensive income because they don't aim for making profit. Instead, they prepare income and expenditure account. So I'm going to prepare income and expenditure account. Have a look at it. Now the idea over here is very simple. You have to add all the income and revenues of the club for the particular year and minus all the expenses. So let's see what incomes do we have. So I'm just giving a heading for income here. You can call it revenues also. Okay. So very first, in a club, in a not-profit organization, the very first thing we are looking at is membership fees. Membership fee income. Now if you look at, we got this from membership fee account. Can you see this? 15,840. So 15,840 is the membership fee income for the current year. If you look at the receipt side, you also sold some race ticket and this is also your income, 3496. So I'm writing here sale of race tickets. Which is 3,496. And another thing you guys need to understand is, if we are a welfare organization, if we are a club, we do receive donations from patrons, from people who like our services, from people who acknowledge our services, that we are doing something good. So for a race club also, there are people who like our services, they may donate something. Okay, so if you look at the receipt side, especially for your incomes, see two incomes I picked from here, sales of race ticket and donations here, 1416. So donation is also a source of income for clubs, for not-for-profit organization. So how much donation we got? 1,416. Now we also paid donation. We can net it off if you want to, or you can take this donation in your expenses and this donation in your income, or 1416 minus 280, it's up to you. So what I'm going to do is, I'm just taking donation as an income. This donation I will take as an expense. So donation is 1416. 1416. These are all my incomes. I add them. I get 20,752. Okay. So now we've got total income. The next step is, what are the total expenditures of the club? So I'm writing here expenditures. I highly recommend, when you are trying to find out expenditures, look at the payment side. This is the receipt side, this is the payment side. So the very first we come across is administration expenses. Admin expenses, which is 1304. Then we've got insurance, 11,216, but we also got some refund here, 4,000. So I'm going to subtract that 4,000 from here. So that's the net insurance we paid, which comes to 7216, 7,216. All right. Then we have horse trainer expense, 10,200. Horse trainer expense, 10,200. Obviously it's a club, so you will have horse trainer and you got to pay them. Donation I'm taking as an expense here. We are giving donations to other organizations, so it's an expense for us. If we receive, it's an income here. If we pay, it's an expense. So it's 280 here. Then raise price we can take here, cost of raise price which we have used here, This is also an expense which is used during the year. I can write here cost of race prices 2176. Stationery is also an expense. Stationery item like pen, pencil, papers and all that, 1432. So if you notice, most of the expenses we got from the payment side and some calculation which we have made here in the T account. I also want you to pay attention to building. The original cost was 11,360. Forget that, that's not relevant. Opening balance of building is 7,400 and closing balance is this. That means it's on valuation. So the difference is depreciation here. So I'm writing here depreciation of building, depreciation on building. So you can show the working. Opening balance was 7,800. Closing balance is 6,240. That gives you a depreciation of 1,560. Now please add all these. When we add all this, we get total expenses, which comes to 24,168. We subtract. Now here I want you to pay attention. The total income of the club is 20,752. But the expenses are 24,000. Generally, if your income is less and expenses are more, we call it a loss. But because it's a not-for-profit organization, they don't aim to make profit and loss, therefore they don't call it a loss. Instead, we have a specific term. Let's see how much it is. 20,752 minus 24,168 will give us 3,416. It's a negative figure, but we are not calling it loss. There are two words. Either we call it deficit or we call it excess of expenditure over income. So if your expenditures are more, income is less, don't call it loss, call it either deficit or excess of expenditure over income. So your income and expenditure account is made. In the end, we are asked to prepare statement of affairs, which is another name for statement of financial position, which is balance sheet. So it's very simple. I'm preparing it here. Statement of affairs, which is actually statement of financial position or balance sheet. So here I would start off with my assets, and obviously if you're preparing statement of affairs and this is prepared on December 31st, so I have to take closing assets. My closing assets, if I look at here, my closing assets, I have building, closing value 6,240. Coming down, I have membership fee receivable, closing balance 680. This is also an asset. I'm writing here membership fee receivable, which is 680. Okay, then coming down, prepaid is a liability, payable is a liability, stock of prices, closing balance 380, stock of race prices, closing balance 368. So I've taken building, it's an asset. Membership fee receivable, closing balance is an asset. Stock of race prices is an asset. Now if you look at, we have bank closing balance. Since payment side is greater, closing balance is coming here. So if the payment side is greater, that means this 104 is actually a bank overdraft. And if it's an overdraft, it's a liability, it's not an asset. So I'm going to add all these three now. 6240, 680 and 368 will give me 7,288. From this, I'm going to minus my liabilities. This is how we prepare statement of affairs and club accounts in not-for-profit organization. My closing liabilities, obviously bank overdraft is my closing liability. So I'm here writing here bank overdraft. Bank overdraft is my closing liability, which is 104. Coming here, my closing liability is membership fee paid in advance. It's a liability. 296. So I'm writing here membership fee prepaid, which is paid in advance. It's a closing liability of 296. We also have payable to supplier for raised prices. Closing balance, it's a liability again, 544. So I'm writing here payable to suppliers, which is 544. So from your total assets, these are your total assets. When you minus your liabilities, we get net assets. So from 7288, if I minus all these three, I get 6344. On the opposite side, we write financed by. Financed by means if you have this much of net assets, how did you get it? Where did you get the money from? So the very first thing here, if you notice, we had accumulated fund, that is the opening capital. This much the club already had, 9760. So I'm writing here accumulated fund, 9760. And then we have to incorporate this. Because it's a deficit, it's negative balance. In other words, it's a loss. So I'm writing here less deficit. It's 3416. See if we can get this. 9760 minus 3416 will give me 6344. Hence balanced. So guys, here I need to emphasize on a very important point. Especially most of the not-for-profit organization, most of them, I'm not saying all of them, most of them do get donations. As here, so on the receipt side you will see donations. So if it is just donations, you can take it as your income here. Among your income you can take donations. But sometimes what happens, donations are received for a specific purpose. Let's say I am the person who's the donor. I am giving your club a donation, let's say 10,000 US dollars or 1 million US dollars, but I want you to use this donation for a specific purpose. Maybe if it's a hospital, I'm giving you a donation, but I want you to buy a CT scan machine. If it's a hospital, I'm giving you a donation, but I want you to improve and upgrade your laboratory services. So if donations are received for a specific purpose, we do not take the donations among income. Instead, we show them here as a restricted fund. So I hope you have understood income and expenditure and receipts and payment account, or you call it accounting for not-profit organizations. If you have any question relating to not-for-profit organization, leave it in the comment section below. I will respond to you. Also, let me know which part of the world you are watching my video from. I would like to know where my subscribers are. If you're not yet subscribed, please subscribe my channel and show that you value my work. If you like this video, please share it with your dear and near ones so that others can also benefit. Thank you so very much for your precious time. Love you all.